Hey everyone, Couch Investor here with another video for you today. In today's video, we're going to go over ARK Invest's most popular ETF, which is ARK Innovation ETF. Obviously, they are offering 4 other ETFs as well. But in this video, we're just going to go over this one and their top 10 holdings. If you want me to cover another ETF, let me know down in the comments below. Or if you want me to cover one specific stock in those ETFs as well, let me know down in the comments below. The most popular one that will be picked, I will be covering that in a future video. Now, before I get started, if you haven't subscribed to the channel yet, help me grow it by subscribing to my channel. And if you like the videos, maybe leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there to you guys. So without further ado, let's get started. All right, so first let's start with a little introduction on ARK Invest and Cathie Wood. Cathie Wood is the CEO and she manages that famous ETF, the Innovation ETF. So what's the difference between an ARK Invest ETF and a classical Vanguard or iShares ETF? Basically, this one is actively managed, meaning every day you could see the percentage in each holding change. In the classical ETFs, they usually follow an index and that's about it. So let's say one day Stratasys is in the top 10, but the other day Stratasys is not in the top 10, ProtoLabs comes in the top 10. That's for example. And that's what actually happened in the last couple of days as well. But we're going to go over the top 10 holdings soon enough. Basically, Cathie Wood said, and she's famously for putting a Tesla price tag of $7,000 per stock in 2024. She usually features on CNBC. If you want to watch those interviews, links will be down in the description below.
Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And
so let's first look at what type of ETFs they are offering. All right, so the 5 actively managed ETF being offered right now is ARK Innovation ETF, ARK Autonomous and Robotics. They changed their name because before it was ARK Industrial Innovation, but Autonomous Tech and Robotics sounds better. Then we have ARK Web 2.0, Financial Technologies ETF, and Genomics ETF, which is basically Illumina, Intellia, Invitae, Crispr, etc. Now in this video, we're going to talk about ARK Innovation ETF, but like I said, if you want me to cover any other ETFs, let me know down in the comments below. So let's get started with the top 10 holdings, shall we? All right, so like I said, the number 10 and number 11 spot changes quite frequently. So I will start with number 11. Number 11 is Stratasys.
All right, so let's start with Stratasys. Stratasys is an American manufacturer of 3D printers and 3D production system, as you can see here, for office-based rapid prototyping and direct digital manufacturing solutions. Now they work with industries such as aerospace, automotive, consumer products, dental, medical, education, railway, and many more. So what's the point of having such a printer in your company or in your manufacturing space? Well, basically, let's say you're operating in China and in the US. Instead of waiting for shipment to go from China to the US or from US to China, you can just send your data to this printer and your design, basically, and the printer starts printing. It's very cost effective, especially for those industries on the top, especially aerospace. You can start printing armrests if some are defect, some missing parts, I don't know, in the plane. Obviously it all has to be regulated and such, but that's what's happening right now. Now let's look at the stock. As you can see here, the stock was at 135 or something back in 2013. That was when, well, everybody started talking about 3D printing technology. It's like a dot-com bubble. Basically everything went up. Same thing with ProtoLabs, we'll see a bit later. But as of today, the stock is only down 5% year to date, but it was down over, I think, 30% or so, 35%. But as 3D printing companies get more and more exposure, and especially now, some companies, especially in the aerospace and automotive industries, will have to reduce costs. I could see them switch to 3D printing technology.
Number 10 is Intellia.
All right, so next up we have Intellia. Intellia is basically in the same category as CRISPR Therapeutic, as Illumina, Invitae, and many more in the genomics industry. So they are a biotechnology company developing biopharmaceuticals using a CRISPR gene editing system. So their mission is basically developing curative genome editing treatments that can positively transform the lives of people living with severe and life-threatening diseases. Like I said in my previous videos covering Invitae and Illumina, the healthcare evolution system will get better every year or so, I believe, if they can get these genome editing treatments going and approved by the FDA and all the other governing powers over such matter. But if you have, let's say, a severe disease or something, and you can get it treated early by a genome editing treatments, there are so many people that will have better lives thanks to companies like Intellia, Illumina, Invitae, and CRISPR Therapeutic, and many more. So let's just look at the stock real quick. As you can see, its all-time highs was in 2018, $32, so we're not that far away from it. Year to date, the stock is above its starting price, 40% over it. In the last couple of days, the stock hasn't moved much. The last day it went down a bit, and for the last month we can see a almost 46% increase in price. Obviously, with the world moving fast now into innovative and disruptive stocks, I could see this company move even higher and higher in the near future.
Number 9 is a very famous stock and very famous service I think most of us are using right now, is Roku.
Alright, so next up is Roku. So Roku manufactures a variety of digital media players that allow customers to access internet streamed video or audio services through television. So instead of just having HBO Max, as you can see here, or let's say Netflix or Amazon Prime or whatever, with Roku you can they collect all of those streaming services, videos or audio through your television. Let's first look at the stock. As you can see, the stock was higher at around $170 or so, so it's down almost 40% because numbers, revenue and such disappointed a bit. But for me, in the future, I think Roku has a bright future. And if you are interested in investing in the streaming industry and you missed the Netflix train or whatever, I think Roku is a good play, and I will show you why. So as you can see here, each time a user signs up for Netflix or some other paid services, Roku gets a commission. For the ad-supported services on its platform, the company gets a cut of any of the advertising viewed by its user. The Roku operating system, OS, which powers a growing number of smart TVs, was found in 1 in 3 smart TVs sold in the US last year. So basically that's the secret for expanding its user base, and I think it will grow more and more as people cut their cable TV subscriptions. And before, Roku was sold apart, so you had to install it on your TV or so, but now, as you just heard, they are integrating Roku OS in a TV already when you buy that TV. Same thing with, it's like a Google Chromecast or whatever. You will have those services, if you pay for them of course, on your TV already installed. And that's for me one of the key things for Roku in the future. They can add so many channels as more and more channels will go digital. They can be added to Roku, especially if Roku can raise the numbers of smart TVs sold with Roku integrated. Because as a company, let's say you want to go into the streaming industry, you will look at how can I get my content to as many people as possible. And if you see statistics like this, where Roku is in 1 in 3 smart TVs sold in US, you will probably want to have your content on Roku's platform.
Number 8 is ProtoLabs, same thing as Stratasys in the 3D printing industry.
Alright, next up is another 3D printing company called ProtoLabs. ProtoLabs is a company that provides rapid manufacturing of low volume 3D printed CNC machined sheet metal and injection molded custom parts for prototyping and short run production. Markets like medical devices, electronics, appliances, automotive, aerospace, as you can see here again, use these parts. So a bit of the same like Stratasys. Again, if you would like me to cover specific stocks in those ETFs, let me know down in the comments below, or if you want me to compare a video, ProtoLabs and Stratasys. If there is enough demand, I will for sure cover that. So let's look at the charts real quick. It's pretty young, younger than Stratasys. It was going public in 2012. As you can see, year to date, the stock has gone up 22%. Obviously, its lowest point, you could have almost double your investment if you bought it at its lowest point, but very few people can find lowest point in such stocks. Same thing with Stratasys here. I can see the stock move even higher in the future as the 3D printing business will be booming, as it is very cost effective.
Number 7 is a famous stock I already covered on this channel. It's Illumina. If you haven't watched the video, go watch it right there.
Alright, next up is a stock I already covered as well. All videos will be in the top right corner or down in the description below. So I'll just go over the short chart right here. If you don't know, Illumina develops, manufactures and markets integrated system for the analysis of genetic variation and biological function. So again, in the genomic business, if you want to have more information about that stock, please go watch the other video, as I don't want this video to drag on for too long. So the stock, as you can see here, the last month or so went up 12.4%, but year to date the stock has not really moved that much, up 9%, very nicely, but from its lowest point it's up almost 70%, which is quite nice. But I think for Illumina there is a very bright future, as well as for the other genomic stocks that we've covered on the channel. So if you're interested in getting more information, again, please go watch the other video.
Number 6 is 2U. It's an educational technology that provides basically university-like education online.
Alright, next up we have 2U. 2U is an educational technology company that contracts with non-profit colleges and universities to offer online degrees. Now, as you can see here, it offers various amounts of short courses, degrees, boot camps, etc. There are over 230,000 enrolled students across all products, and nowadays with the whole outbreak thing, I think online degrees and such will be very popular moving on into the future. So I think 2U is well positioned in that aspect. Now, it's a very unpopular stock, to be honest. It's a very because, well, first of all, education, nobody thinks of educational stocks and companies, but this again is more like a tech company, less like an educational company. Obviously it offers education, but you should look at it as a tech company. Now let's look at the graph right here. The stock went public in 2014 for around $14 or so. It topped in 2018 at almost $100, so now it's down 66%. Year to date, we are in the greens right here, around 40% up, and I think we are going to make our way back to $100 probably in the next couple of years or so.
Number 5 is Zillow.
Alright, so Zillow is the next one. Zillow is the leading real estate and rental marketplace dedicated to empowering consumers with data, inspiration, and knowledge around the place they call home, and connecting them with the best local professional who can help Basically, you go on Zillow to buy, rent, sell, home, loans, and find an agent. Then you have a couple of options. If you are an agent yourself, you can advertise yourself, you can advertise your business, etc. Basically, Zillow is a marketplace where you come to look for a house or to sell a house yourself. There are investors as well. If the page wants to load, you can see here, reimagining real estate. Our homes are the heartbeat of our lives, and finding a home shouldn't be so hard in today's always-on world. That's why we're reimagining the traditional rules of real estate to make it easier than ever to move from one home to the next. Again, all the links will be down in the description below. Now let's look at the graph right here. Zillow has been very volatile in the last couple of years. You can see gone up, then down, up, then down, up, then down. This year we are up, I think around 30% or so, exactly 32%. From our peaks to the lowest point was 65%. Then from the lowest till now is over 153% in the greens. Zillow for me is a very complicated stock, as it is very much correlated with obviously the real estate market. So every time there's a small crisis or so, that stock will be hit very hard, and probably the quickest, since, well, real estate is, I wouldn't say in a bubble right now, but it's very difficult to calculate and to see the potential and financial. Obviously, it's always good to have some real estate in your portfolio, but for me, that's a stock where I'm not very, an industry where I'm not very familiar in, so I'm not gonna go into that stock very much.
Number 4 is Crispr Therapeutic.
All right, so Crispr Therapeutics, it engages in development and commercialization of therapies derived from genome editing technologies such as CRISPR-Cas9. It allows for precise and directed changes to genomic DNA. Like we've talked before, genomic editing and everything in the genomics industry, making changes to default cells and DNA will be huge in the future. And obviously, what better company to be positioned in that industry than CRISPR, thanks to, well, the CRISPR technology that if a company wants to use, they will probably have to contract this company, if I'm not mistaken. Let's look at their partnerships real quick. I don't know if you've known, but Bayer is one of the biggest medical and pharmaceutical companies in the world, especially in Europe. Now let's look at the graph real quick. This year we're going to be up for what, 5% or so, but from its lowest point, if you invested in these types of companies, you would be up almost 85%. Over the long term, you can see here it's gone up and then down a bit. This was the trade war section right here, but I can see the stock going up like most genomics stocks.
Number 3 is another stock I already covered on this channel. All the videos that I've covered will be up here in the top right corner or down in the description below. This one is Invitae.
Right, so another stock I've already covered is Invitae. I'm just going to go over the graph right now, see if there were some drastic changes. As you can see, the stock was very volatile in the last month or so. So you could have chosen a couple of entry points right here at maybe 15, 16 or so. But as you can see, I can't draw here, but it goes up in a nice curvy way. Year to date, the stock is up 6%, but from its highest point, it's down almost 40% or so. So again, same thing here. What is Invitae? Invitae is a leader in advanced medical genetics. Their company was founded with a singular mission to make genetic information affordable and accessible. So you have companies that do the research about genetics and will show you your results in your genes if they are faulty genes, and then there are companies that can edit those genes. Two different types of companies that will work in the genome and the genomic world, let's say.
Number 2 is one of my most favorite stocks. It's Square.
All right, we're at number 2 right now, which is Square, one of my favorite stocks in my portfolio and the ones I already covered a couple of times on the channel. If you want to go watch that, like I said, links will be down in the description or in the top right corner. So the last time I've made a video about Square, I think it was around a month ago or so. So the stock was, I think, at $72, if I'm not mistaken. So you would be up 20% or so since my last video. And I said in that video it wouldn't surprise me if we're going to $100 in the short term, and then in the next couple of years maybe over to the $200 mark or so. So I will just go over the chart right here because the information is going to be more helpful in my longer videos, specifically about Square. So as you can see, in the last couple of days the stock went up 10% or so. It even went above $90, but then went back down on a reddish day, but overall, as you can see here, the stock year to date is up 40%. Like I said, innovative and disruptive stocks will win in the long term. Now let's go over to the number 1 pick.
And number 1 is obviously Tesla.
Alright, so the number 1 stock in the ETF is obviously Tesla. Some of you might know I have bought Tesla right around this point right here, $186, and I sold it, believe it or not, around $903, so it's about here or so. But again, with Tesla, I will make a separate video because there's so much to talk about Tesla. But one important thing I want to mention, Tesla should not be looked at as a vehicle manufacturer, even though that's what they're doing. You should look at it as a vehicle manufacturer and a tech company and a data company. Because with everything that's going on in their cars, they should not be looked at as Ford or General Motors or any other vehicle manufacturers. They should be looked at as tech company, AI company, data companies like the big ones, Facebook, Google, Microsoft, etc. As we can see here, year to date, obviously Tesla has fared wonderfully, up 100%. Obviously at its lowest point, it was at around $361. It would be up almost 150%. But like I said, I will make a separate video about Tesla because there's a lot to say about this stock. But this is the number 1 pick in the ARK Innovation.
That will be it for this video. If you liked it, please leave it a thumbs up, as it really helps me out getting my videos out there. If you have any questions regarding a specific stock, or if you want me to cover a specific stock or ETF, like I said, leave it down in the comments below. And as always, take care, stay safe, and see you all in the next video. Bye bye.